Well, hey everybody, I'm Jamie Trull. I am a CPA, a profit strategist, and a financial literacy coach. And I have been working on all things stimulus lately to try to help you navigate. So if you have not, please go ahead and subscribe to my channel. I have lots of videos out there already about PPP, about EIDL, and all kinds of free resources that you can get your hands on. So go check that out. Now, today I'm going to be talking about a specific free resource that I have created to help you with applying for PPP forgiveness, because I think we're all in this place right now where the applications, and now there's two, are confusing. Which one do I use? How do I fill this thing out? How do I maximize my forgiveness? So we've created a tool just for you. So if you do not have it yet, go to balancecfo.com/PPP tracker and download it. We'll send it to you. You will also have these videos in there that you can reference back to so that you can actually go ahead and put this thing together and get maximum forgiveness. So this specific video is going to be for those of you who are going to use the EZ form, or for those of you who don't have any employees, okay? And if you're not sure which form you need to use, I'm going to talk about how we figure that out here in the beginning. And then if you determine by this very beginning here that you need to be using the full form, then you can go over to the video that explains that, which I have linked down below, okay? So let's jump into this file, and I'm gonna kind of show you around a little bit. So you have an option here. If you got your loan before June 5th, you can opt either the 8-week, which was the original time period, or the 24-week period. So you can decide what makes the most sense for you. In a lot of cases, the 24 weeks is going to make more sense, especially if you didn't already spend all of your money within the 8 weeks. If you already spent all your money within that 8 weeks, you can go ahead and just select the 8-week covered period. If you got your loan, though, after June 5th, then you have to use the 24-week period. So you can pick whichever one you're going to use, or you can take a look at both of them and compare them if you want to and see if they're any different. But I'm going to do this tutorial on the 24-week one. Overall, the process is the same though. So the calculations behind it are slightly different, but the process is the same regardless of whether it's 8-week or 24-week. So I'm just going to run through the 24-week one. Now, when you jump into this, you are going to go to the Start Here tab. And the Start Here tab is obvious, right? We want to start here. So it's really where you're going to determine which application do you need to use to apply for forgiveness, okay? So in this one, you're going to answer 4 different questions, and these 4 questions are really the basis for whether you can apply using the EZ form. We all want to try to target being able to use the EZ form to apply, okay? So when you jump into here, you're going to see that there's 4 questions. If you are self-employed and you don't have employees and haven't, then you will be able to check this first box, yes. So you'll see it's the borrower, self-employed, independent contractor, sole proprietor who had no employees when you applied for PPP, and you did not include any employee salaries in the computation of average monthly payroll. So if you applied and didn't include anybody but your own salary in your PPP application, you can say yes here. Then you actually do not need to do any of the other answers, because that's the only one that matters in this case. Now you'll see down here that you have met EZ Form Criteria 1, and that now says use Form 350 EZ to apply for forgiveness, okay? But let's say that wasn't true and we kept going in this case. So let's say that wasn't true. And we're going to drop down to the second criteria. So the second criteria is the borrower did not reduce annual salary or hourly wages of any employee by more than 25% during the covered period or alternative covered period compared to the periods between January 1st and March 31st. And it talks about that. So basically, if you did not reduce your employee's salary, and this is base salary we're talking about, so that doesn't include commissions and tips and all of those things. This is base salary or hourly wage. So previously, if you were paying them $12 an hour, if the same employees came back and you continued to pay them $12 an hour, then you could say yes here. So as long as you did not reduce any employee by more than 25%. Now that's employees. If you have the same employees, if they're different employees, then it doesn't matter. But if they're the same employees, you cannot reduce it by more than 25%. and be able to qualify for this EZ form. So let's say in this case that we say, yeah, actually that does apply to us. That's true. You'll notice that still though, we have some more criteria we have to meet. So we have to meet also this one and one of these two in order to meet the criteria. So let's keep reading. So the borrower did not reduce the number of employees or the average paid hours of employees between January 1st, 2020 and the end of the covered period. Remember, that's the end of your 8 weeks or the end of your 24 weeks. Ignore reductions that arose from an inability to rehire individuals who were employees on February 15th if the borrower was unable to hire similarly qualified employees for unfilled positions on or before December 31st. Okay? Also ignore reductions in an employee's hours that the borrower offered to restore and the employee refused. So there's a lot of caveats in here. This one is a little clunkily worded. I'm not really a huge fan of how they worded this out because I had to read it probably 100 times before I really understood what they were getting at. Because I think you read it on its face and it says the borrower didn't reduce the number of employees or average paid hours between January 1st and the end of the covered period. Well, you probably did at some point, right? You probably had to shut down or maybe lay off employees or something like that to where you did actually reduce the number of employees or the average paid hours of your employees between that time period. And so you would maybe think that the answer there is no. But I think what this is really getting at, especially when you consider the fact that it talks about ignoring reductions that arose when you tried to rehire, I think this is really talking about from a point in time, right? So meaning from the time that you, from January 1st to the time that you are applying for forgiveness, the end of your covered period, which is generally you want to probably apply pretty quickly after the end of your covered period. Now you can apply before the end of your covered period if you've used up all of your money. So you can apply if you pick 24 weeks, you can apply after 16 weeks if you've used up all of that money. So that would kind of be considered the end of your covered period in that regard. But basically, if you have the same number of employees, full-time equivalent employees, remember, so that is considering part-time employees are basically considered as a portion of an employee, right? But if you add up your full-time equivalent employees between January 1st, and you look at the January 1st number, and then you look at the end of your covered period, or when you're applying for forgiveness, what your number of employees was, if it's the same or more, then you're good, right? And there are some exceptions that even if it is less, that if it's less because you tried to restore employment and your employees refused, perhaps they wanted to stay on unemployment or something like that, which you are supposed to then actually, if they refuse employment and you know that they're taking unemployment, you are supposed to report them. And ultimately, if you couldn't find any similarly qualified people, which you would have to probably document the fact that you could not find other people, that you looked and there were no other people that you could find that would be similarly qualified. If you can document that, then that won't hurt you and you can still claim yes to this. But let's say, you know what, actually we laid off a bunch of people and we didn't bring them back because we just didn't have the work for them to do. Then maybe we would say no, okay? So now notice we're still not meeting the EZ forgiveness. Now, if we come down to the borrower was unable to operate during the covered period at the same level of business activity as before February 15th due to compliance with requirements established or guidance issued between March 1st and December 31st, the Secretary of Health and Human Services, the Director, Centers of Disease Control and Occupational Safety and Health, related to the maintenance of standards of social distancing or any other work or customer safety requirement related to COVID-19. Okay, what does all that mean? What that is really saying is if you couldn't operate at your same level between when you got the money, so when you got your PPP and when your covered period ends, if you couldn't operate at the same level during that full time because of what's going on with COVID, and that doesn't mean because demand went down, but perhaps you had to shut your building down because you actually were under a government mandated shutdown. Or maybe you could maintain services, but you had to be socially distanced, and that allowed you to not be able to take as many customers as you normally would, right? So if you're a restaurant and you couldn't allow as many people in, or you had to shut down the inside and only do delivery, right? So regardless of whether you shut down completely or not, then you likely can actually can check this. So the only instances really that I can think of where you couldn't check this is if you were able to continue with your business, or maybe your business was down, but you could still do all of your business remotely, or you didn't have to fully shut down anything at all, then you wouldn't be able to check this box. But in a lot of instances, you're going to be able to check this box if you shut down at all during the time that you had PPP money. Now, if you didn't get PPP until after the shutdown was over, you couldn't necessarily count that. But if you got PPP money and you had to stay socially distanced and couldn't take as many customers because of that, then you likely could say yes to this. So I think that this will be pretty broad in who can actually say yes to this requirement. And even if you say no to all of these other things, except for this one, you still have to maintain hourly and salary wages. But if you said yes to this one, you're going to meet your forgiveness criteria 3, and then it's going to tell you that you get to use the EZ application form. Everybody should be striving to use the EZ application form. Okay, if you at all can, you want to meet one of these criteria. All right, so just make sure that you're being cognizant of that, because if you can't meet this last one for some reason, then you need to make sure that your FTE count at the end of your covered period is the same as it was as of January 1st. Okay, so you can really work with that to make sure that you can meet those requirements. And the thing is, if you don't meet those requirements, what does that mean? That means you have to do the full forgiveness form, and the full forgiveness form requires quite a bit more calculation around your average FTE count versus a prior period, and around that salary hourly wage reduction on an employee by employee basis. It takes a lot more time to do the full forgiveness application. So you really, really, really want to be targeting to fill out the short form, the EZ application. And you really have a lot of control over that. So just pay attention to these specific things, and that will help you a lot. Okay, so let's say you did all of this, and yay, you do qualify for using the EZ application. So whether it's because you just don't have any employees at all and you automatically default into being able to use the EZ, or you've been able to kind of maneuver to make sure that you meet one of these 3, then you are going to be in a place where you can use the EZ form. So what do we do now? How do we complete the EZ form? Now, importantly, within this workbook, there is the EZ form and the long form. You'll see these blue tabs. If you are able to do the EZ form, you can ignore a lot of these tabs, okay? And it's going to walk through what you need to do. So you're just going to go straight to the EZ form, and you'll notice here that this is all kind of filled in with where this information is coming from. And if you try to actually click on any of these, it's not going to let you input anything here, because all of this is calculated based on information you put in other tabs. And importantly, the only tabs you need to fill in are going to be yellow. Okay, they're going to be really clearly marked. They're going to be yellow. These blue tabs all automatically calculate based on what you put into the yellow tabs. So there is actually nothing for you to complete on this tab specifically, but you can come over here and see the instructions to completing the EZ form. So it'll tell you which tabs do you need to complete. So in this case, it says to fill out step 1, loan tracker. Okay, that's the main one. If you're doing the EZ, that's the main one you have to do, is just that step 1 loan tracker. Now, if you have no employees, then there are no other tabs that are going to be necessary. Okay, only step 1, which is this step 1 loan tracker down here. That's the only one that you're going to need to do. If it's just you and you're only getting PPP to pay yourself and maybe some other non-payroll things, that's all you would click. Additionally, if you keep going, you're going to not fill out, it says specifically, even if you have employees, you're not going to fill out step 2, which is your FTE reference period, because that doesn't matter. You don't actually have to do that calculation. Yay. And then if you have employees, okay, other than yourself, you are going to fill out cell D44 on step 1. I'll show you that in just a minute. Or, and that's kind of a shortcut, or you're going to complete these long form calculations if you want to by employee on step 3 and step 4. So it just depends on whether you would rather do the full form calculation. But in a lot of cases, you're going to have payroll reports that will simplify this, where you can just kind of put the number in and go with that. So we have both options here, and I'll show you that in just a second, how that's going to work. And then you're just going to review this for accuracy, because this is ultimately your forgiveness application. This is what you would actually put into the application that you fill out and give to your bank. Now, you'll have to wait for your bank's instructions on how to do this and how they want you to apply, whether they want you to apply via a paper form that you fill out, whether they want you to apply through a portal that they've created where they're going to ask for this information a little bit differently. So you'll have to wait for your bank to determine and tell you how you apply for forgiveness. Okay, so once we go here, let's go to the first step, step 1, loan tracker. And remember, if you don't have employees, this is the only one you need to do. So let's go straight to the loan tracker. So what you'll see here are a variety of questions that are used to calculate out the amounts for your forgiveness application. Now, looking through this, you can kind of see that we're going to start with the amount of the loan received. Obviously, we need to know that, the date you received it, and it's going to automatically calculate out your 24-week period, okay? Now, again, you don't have to use that entire 24-week period to pay PPP over, right? It's only 2.5 months worth of payroll anyway. So the expectation is you probably will run out before that 24 weeks is up, but it's automatically gonna calculate that maximum end date for you. Additionally, if you have employees, now if you don't have employees, this doesn't matter, but if you do have employees, there is an option to use an alternative covered period for payroll. What is the alternative covered period for payroll? Well, basically that is saying that you, instead of starting the clock basically when you get the money, which is the default, right? That you get the cash and that's the day that your 24 weeks or your 8 weeks starts, depending on which you choose, that instead you can try to align this better with your payroll periods. And this just helps administratively to do it this way, where it's not as difficult to kind of split out the amounts that you're going to have to put into the tracker. So if you have employees, you can choose the alternative covered period for payroll. Importantly, alternative covered period does not mean the 8 or 24 weeks. There's a little bit of confusion over that. That's not what the alternative covered period is. The alternative covered period for payroll is specifically saying you can actually start the clock for your loan instead of on the day you got it. You can start it on the first day after you received it that your next payroll period starts. So here's an example. Let's say you got it on the 25th of May, right? That's when your money was deposited into your account. Now, instead of starting the clock, you can start the clock on the 25th of May, but maybe your payroll period actually runs bi-weekly and you run your payroll every other week. You can start it on the day of your next payroll period. So let's say your payroll period runs from 6/1 to 6/14, right? Then you could actually start the clock on 6/1 instead. So that's an option. It's only payroll that applies to. It wouldn't apply to your other non-payroll, but it does apply to payroll. And importantly, remember again that it's incurred or paid, okay? So the cost just needs to be either incurred or paid during the time period. So let's say in this instance, you decide to use the alternative covered period, you start the clock on 6/1, and then on 6/2, your payroll period from, May 16th through the end of May is paid out, right? Because a lot of times it's paid out in arrears. That will count. Even though it was for a prior period that doesn't fall within that 8 or 24 weeks, it will still count because it was paid during that 8 or 24 weeks. That's important. It kind of allows you to get another payroll period in. Less important if you're using 24 weeks, because with 24 weeks, you have a little bit more flex. But this was really key, especially if you're picking 8 weeks, you sort of actually can get really an additional payroll period in there. That alternative covered period, though, only available if you are doing bi-weekly or more frequent payroll. So if you only pay monthly or you pay twice a month, you can't choose the alternative covered period for payroll. Okay, so continuing on down, it's going to also ask you, was your EIDL advance already subtracted from your PPP loan amount received? That might sound confusing, but what that really is to say, if you got an EIDL advance grant, not the loan. This is the actual advance or grant, the $1,000 per employee. If you received that money, it is going to need to be subtracted off of your PPP somehow. So in some cases, if you got that advance before you got PPP, it would have already been subtracted off of the amount of loan you would get. Okay. So in that case, you would say, yes, it was already subtracted from it because we want to make sure we don't double count. But for most people, it was not subtracted. So you had the grant and then you got the PPP loan or vice versa, and you hadn't had it subtracted off of your PPP loan amount that you got. In that case, you would say yes here, okay? And then you need to put in your EIDL advance amount that you got. So $1,000, $2,000, $5,000, whatever it was that you got, put that here. That will be subtracted off of your PPP forgiveness. That is clearly in the CARES Act and now in Treasury guidance. It will be subtracted if it wasn't already subtracted when you got the loan. Okay. So did you have W-2 employees other than owners during the period? So this is for those of you, again, who are just owners and you don't have any employees. Obviously, you'd say no. Or even if you're an S Corp owner without employees, even though you technically are an employee, because this says other than owners, you would say no. If you did have employees, you would say yes. Okay? All right. So I'm actually going to fill out some of these so that we have kind of an example that we can go with. So let's say we got 100. You know what? I'm going to do less. 50,000. Well, that's 500,000. 50,000. And we received cash on, let's say 5/25/20. So our end date for the 24 weeks would be 11/8. Or if we wanted to start it on our next payroll period, let's say that started 6/1, that would be 11/15. So it kind of changes it by about a week. We would say the EIDL advance was not, we only got 3,000 because we didn't have a ton of employees. Yes, we have W-2 employees. And this will just say whether I want to use the covered period or this alternative covered period. I'm going to say alternative covered period because I like to align it better with my payroll cycles. That'll be a little bit easier. So we're going to do that. Okay, so now we're going to come down to the owner pay section. So this is where you're going to choose what type of owner you are. So you're either an S or C Corp and you are putting in W-2 wages paid. Remember, only W-2 wages are going to be eligible for forgiveness. So you have to pay W-2 wages if you're an S Corp or a C Corp. Okay, so you're going to list out your names and your W-2 wages. Importantly, you are limited to 2.5 months worth of W-2 compensation based on 2019, maxing out at $20,833. That $20,833 is basically $100,000 annualized to 2.5 months, right? Because the $100,000 is the max. So in this case, you're going to take your W-2 salary that you paid yourself last year in 2019, divide that by 12, multiply by 2.5. That's the max W-2 wages you can be forgiven for. Now you can pay yourself more than that, but you can only be forgiven for that 2.5 months as an owner. Okay, there are different rules. The maximum for employees is different. You can actually increase pay for employees, but not for owners because they don't want you to have a windfall because of PPP. Okay, so also same thing here for partnership or multi-member LLC. You're going to have the same limit of 2.5 months worth. Note, we tell you essentially how to calculate that based on your K1. Or maybe you're a sole proprietor, LLC. This would be true if you're an independent contractor or something like that, self-employed. You would fall into this sole proprietor, LLC. In this case, what you are essentially calculating your amount paid off of is going to be your Schedule C net profit line 31. That's what you're going to put in here. Okay. So in this case, you're going to put in, let's say you maxed out at 100,000. That's the maximum you get per owner. So maybe you made more than that. Then that would be the 2833 would be your 2.5 months worth of owner pay. Okay. So that's your maximum that you would be able to take and be forgiven for. Okay. Now here's where it gets a little bit trickier is when we come down here. So if you're filling out the EZ form, only if you're filling out the EZ form, this is a line you can put in. You have two different options for putting in your gross wages paid to employees. Now, if you don't have any employees, you don't put anything here, obviously. But if you do have employees other than yourself, you are going to put the gross payroll paid here if you want to kind of shortcut the process. So this is good if you have payroll reports that show you really clearly the gross wages paid to your employees during the time period. Okay, so a lot of payroll companies, I know Gusto and other payroll companies are coming up with reports that you can easily pull this information. Again, this is just the gross wages paid for your employees. What is gross wages? That's the amount that goes to the employee, which basically is what went to them, but also what was withheld from their paycheck, right? For things like taxes, their own employee retirement contributions, their own healthcare contributions, right? All of that. So you would put the gross payroll paid here for all of your employees. If you don't know what that is, you don't have a great payroll report, you want to calculate this out a little bit more specifically, you can instead leave this blank and then go and perform the steps in step 3 and step 4. Okay? So you can actually do those 2 steps, which are going to be a lot more involved, not quite as involved as doing the whole full forgiveness application, but they are going to require you to actually write in a little bit more information on an employee basis and actually put in what you paid them each pay period by employee. So you can calculate that out, or you can just shortcut it. It is up to you. Either way works. It just depends on whether or not you have like an easy payroll report you can pull or not. So that's an option. Then down here, you're going to go down to your spending log. And your spending log is basically going to be just that. This is going to be for other things. So what goes on your spending log? Well, this is going to be your employer paid payroll benefits. So employer paid benefits, employer funded retirement, state and local employer taxes. Okay. So this is only if you have employees, or even if you yourself are an employee of your company. If you're a corporation, you're an employee of your company, then you would use this, right? But if you're a sole proprietor LLC, unfortunately, you can't have any employer funded retirement, things like that, because those are not Schedule C deductions. So you're going to put that all down here, and then you're also going to put other non-payroll, rent, utilities, mortgage interest, interest on debt obligations. Okay, you're going to put all of that down here, and you're going to kind of select it. I'm not going to fill out all of this. I'll do a little bit of so during the covered period, let's say 6/10/20 and 6/20 and 7/10/20. Let's say the only thing I really have was rent to my landlord of $3,000 a month each of those months. Okay, and then I'm going to pick rent for both of these. Support kept. Hopefully it's not no. Hopefully the answer is always yes. You want to be keeping support for all of this because it could be asked for at any point in time. And let's say that came out of my Bank of America last 4 digits account. Okay. So that's what you're going to fill in. It's automatically going to pull this rent up into this summary here. And again, you would any of these types of costs you would put down here and categorize them. Okay. So what you're then going to do, and let's just really quickly see what this does. I'm going to put in an amount. So let's say I paid gross payroll of, let's say 20,000. Okay. In this case. So that was my gross payroll to everyone but myself. So now I'm going to actually, in this case, there's nothing else to do if you're filling out the EZ form. If you filled out the EZ form and you used this kind of shortcut, you don't have to even look at any of the other tabs. Yay, because there's a lot of tabs. You don't want to have to look at them. That's great. Now, if you didn't and you want to do the full calculation, you are going to have to go to step 3 and step 4, which I'm not going to talk specifically about in this video. Go find the other video that I did on the full forgiveness application, okay? And I will talk through how to fill out steps 3 and step 4. Okay, so now we're going to come over here and review the forgiveness application and see what it looks like. Okay, so now we're on this step, which is review this application for accuracy. So looking through this, it's going to automatically have populated your payroll costs, which was your $20,000 that you paid to your employees and your $20,833 that you paid to you. That looks right? We didn't have any business mortgage interest. We had some lease payments, no utility that we put in there. And then it's going to add that up, and it's going to basically calculate your potential forgiveness amount in 3 ways. And it's essentially going to pick the smallest of these. So this part gets a little bit confusing to understand, but I'm going to walk you through it. So in this case, we're adding up the total amounts that we paid, right? So we're adding up the 4 different lines here. Those are all the payroll and non-payroll costs that could have qualified for forgiveness. So we add all those up. That total is $46,833. Now our PPP loan amount, right, is $50,000. So that was our total loan. Obviously, we can't be forgiven for more than our loan. So that's why that has to be there. And then the third option for forgiveness amount is payroll costs. So what they're doing here is just making sure that your payroll costs were at least 60% of the total loan proceeds. So in a lot of cases, this may show up to be a number that is way bigger than the amount of loan you got, especially if you paid out a lot in payroll. That is totally fine, because remember, we're only picking the smallest of these. So this is just saying, okay, based on the amount you paid for payroll, we're going to divide that by 0.6. The total amount you could have spent, right, and still have spent 60% on payroll was this amount. But in a lot of cases, that's not going to be the smallest amount for most of you guys. So it's basically, we're going to pick the smallest. So in this case, the smallest is how much we actually spent, right? So in this scenario, it's going to say $46,833 is what we can be forgiven for. Then we're going to subtract the EIDL advance amount. Okay, so that gets subtracted off of your forgiveness. You actually won't see these lines specifically on the forgiveness application. Okay, but there are instructions for the banks that say, if applicable, they should be subtracting it off of there. So that's why I've put this on here specifically, just to show you how that's going to work, because you should have that subtracted as well. In which case your total forgiveness amount would be $43,833 in this case. So in this case, let's also look, because I have a tracker that tells you when you have some extra money that you might be missing out on. So I want to show you this other tab that you can take a look at, which is the Diagnostic tab at the very end. Okay, so now we're jumping over to this Diagnostic tab, which can help you just to kind of give you an overview of the application and how much you're being forgiven relative to how much you got. So in this case, we're going to see that you're going to have your total PPP spent. It's going to break down payroll, non-payroll, total loan, and the amount that was unspent. If you have any amounts that are unspent, even if you meet that 60% criteria for payroll, you still have to spend the rest of it to get it forgiven. Okay, that doesn't automatically make it forgiven. So you have to have enough expenditure of the PPP money. If you don't spend it, you won't get it forgiven. So in this case, we didn't spend it all. So we've still got $3,000 that won't be forgiven. Now, in this case, the FTE count is not going to be applicable because we didn't have to do that since we're using the EZ form. And you're going to come down here to forgiveness, and it's just going to give you the total and say, okay, $50,000, here's how much we calculated as forgiveness. It's going to put your EIDL advance adjustment in here, and then it's going to come up with your total amount forgiven and the amount becoming a loan. Because remember, we have to subtract that $3,000 out of the amount of PPP forgiveness we would get. And in this case, it would say no portion of loan will be unforgiven. So a portion of the loan will be unforgiven. So what does that mean? Well, we've got $3,000 more to spend. So we could spend this on what we want to. In this case, we are well above the 60% rule for payroll. So we could use this for another month of rent if we had that to pay, or we could pay more to our employees. So in this case, let's say that we decide we're going to pay more to our employees, and we've got another $3,167. So we can come back over here to this gross wages and decide we're going to pay them exactly that $23,167. Now, when we come over here, our full amount of the loan has been spent and max allowable forgiveness is achieved. Now, that doesn't mean that we're going to get the whole thing forgiven, because remember, we have the EIDL advance that needs to be subtracted out, but the maximum we could get forgiven under PPP will be. Okay, so that's really how this is going to work. And then you're going to be able to come back over here to the EZ form and see the same thing here. So you can sort of play around with this and see what you get And if you're not achieving full forgiveness, then you can make some changes in here to achieve that forgiveness, okay? Now this applies for either the 8 or the 24 weeks. And if you're not achieving full forgiveness on the 8 week, you might want to try and see if you can get there on the 24 weeks, okay? Okay, so that was the video tutorial if you're using the EZ form. If you are not, if you have to use the full forgiveness form, there are a few additional steps you would have to do. So go check that out. There's a video linked down below that will take you right to the video that's for the full forgiveness, okay? But it's still the same link to get this tracker. So balancecfo.com/PPP tracker. You will get both versions, okay? Bye.